So, you've hit 45 years old, and your savings account is looking bleak. No retirement fund, no investments, no safety net. Maybe life got in the way, kids, mortgages, emergencies. Maybe you just didn't know where to start. But now you're staring at the clock, and the panic is setting in. Is it too late? The fear of financial instability can be overwhelming, but it's crucial to acknowledge that you still have options. While it may feel like you've missed the boat, many people have successfully built wealth in a shorter time frame by making aggressive financial moves. Now is the time to shift from panic to action and make every financial decision count. No, it's not too late, but you need to act fast, and you need to act smart. Let's break down a realistic, strategic, no-nonsense plan to get you on the right financial track. You don't have decades to waste, so every move from this point forward has to be intentional, aggressive, and effective. The longer you wait, the harder it will be to correct your financial trajectory, so treating this as an urgent priority is essential. Developing a focused and disciplined approach will help you recover lost time and build the financial security you need for the years ahead. Step 1. Exceedptrealitily, then GTOVER it. The first step is to accept where you are financially, without shame, without self-pity. What's done is done. The good news? You still have time. The bad news? You're now on an accelerated path, and that means no more excuses. Facing the reality of your situation is essential because denial will only waste more of your precious time. Instead of dwelling on past mistakes, channel your energy into making concrete changes that will help you move forward. Pull up your bank statements. Look at your debt. Find out where your money is going. This is your financial rock bottom. Own it, because from here we go up. You need absolute clarity on your financial picture, how much you owe, how much you earn, and where every dollar is being spent. By dissecting your finances in detail, you'll be able to create a roadmap that eliminates unnecessary expenses and redirects money toward meaningful financial growth. Step 2. Cut the financial dead weight. At 45, you don't have the luxury of slow, leisurely financial growth. You need rapid transformation. That starts with eliminating waste. Here's how. Slash unnecessary expenses. Stop wasting money on things that don't serve you. Subscriptions you don't use, dining out constantly, luxury brands, and impulse buys. You can't afford to be careless. Every dollar you spend should serve a purpose, whether it's for necessities, investments, or an emergency fund. If you're spending mindlessly, you're sabotaging your ability to build financial security. Downsize if necessary. If your mortgage or rent is eating too much of your income, consider downsizing. Sell that car with a high payment and get a cheaper one. Reduce your fixed costs now, not later. A more affordable lifestyle means freeing up cash for savings and investments. Think about what truly adds value to your life and cut everything else that drains your bank account without giving significant returns. Cut high-interest debt first. Credit card debt, pay it down aggressively. Those interest rates are bleeding you dry. Consider a debt avalanche strategy. Pay off the highest interest debt first, then roll those payments into the next. Debt is a silent killer of financial progress, and if you don't prioritize eliminating it, you'll remain stuck in a cycle of financial stagnation. Tackling it head-on with a clear strategy will free up more money to put toward long-term growth. Step 3. Supercharge your income. You can only cut expenses so much. The bigger problem, your income might not be enough. That means it's time to increase cash flow dramatically. Negotiate your salary. If you're employed, it's time to demand what you're worth. Research industry standards. Make a case for yourself and ask. Most people don't negotiate their salaries, and it costs them thousands every year. The extra money you could gain from negotiating your salary could be the difference between financial struggle and stability. Employers expect negotiations, so if you're not asking, you're leaving money on the table. Start a side hustle. First, forget slow, passion-driven side gigs. You need cash, and you need it quickly. Think high-demand skills, freelance work, consulting, flipping items, or renting out assets you already own. Side hustles are no longer optional in today's economic climate. They are a necessity for anyone serious about catching up financially. Find something you can start right away, with minimal upfront investment, and scale as quickly as possible. Leverage your skills. What are you good at? What do people pay for? If you have experience in management, sales, writing, tech, or marketing, monetize it. Teach, consult, or build a service business. Your years of experience in the workforce have given you skills that people are willing to pay for. Identifying and capitalizing on these strengths will allow you to create new income streams that support your financial goals. Passive income. Not yet. Passive income sounds great, but right now, you need active income. Focus on making more money today. Passive income requires upfront investment, whether time or money, which you may not have right now. First, get your finances in order and increase your earnings. Then you can transition into passive income strategies that provide long-term financial security. Step 4. Investeringsuit and agera. You have 20 years before you hit 65. That's still enough time to build wealth, but only if you make strategic investments. Max out retirement accounts immediately. If your employer offers a 400 and on with a match, that's free money, get it. If not, open a Roth IRA or a traditional IRA and start contributing heavily. Time in the market matters more than timing the market. So start investing now and increase your contributions as your income grows. The longer your money has to compound, the more financial security you'll build. Go hard on index funds. Forget stock picking or day trading. You don't have time for that risk. Invest in broad market index funds like the S&P 500 and contribute consistently. The stock market rewards patience and consistency. Instead of gambling on individual stocks, stick to proven investment vehicles that offer steady long-term growth. Consider real estate, but be smart about it. Buying rental property could be a powerful way to build wealth, but only if you can do it without drowning in bad debt. If you're in a high-cost area, consider out-of-state investing. Real estate can be an excellent wealth-building tool, but only when done strategically. Rushing into a bad deal could set you back rather than push you forward. Avoid stupid speculation, crypto, penny stocks, wild speculative investments. No, you don't have the margin for gambling. Stick with proven wealth-building assets. The goal is financial security, not chasing quick riches. Stay disciplined and resist the temptation to throw money into high-risk ventures with uncertain outcomes.